Luxury fashion company Prada raised about $2.5 billion in an IPO. It's the biggest IPO so far this year in Hong Kong, but it's a disappointment for the company's owners. A shaky global market forced the Italian fashion house to price its shares at the bottom end of the target. Joining us right now is Brian Sozzi. He is a top-ranked equity research analyst. He specializes in the luxury retail sector for Wall Street Strategies. Brian, thanks so much for coming in, talking to us about the IPO. What do you make of the price cut? Just how disappointing is it?
I don't think it's that disappointing if you were following this story over the past couple of weeks.
It's not a surprise.
It's not a surprise. At one point, you actually had Prada potentially coming to market at a valuation of 27 times. What happened now, it's about 22.5 times. And I think it reflects, it's not an indictment on the company per se. Luxury goods globally is a great place to be. But I think it's an indictment on everything that's going in the markets right now.
I know you're not initiating coverage on Prada, but you do follow Tiffany, Movado, Coach, other retail brands. If you were, what would you say? How does Prada stack up to the way that they execute their business? Because I just heard you say, it's not an indictment on the company. Do they do better or worse than their competitors?
Well, if I was initiating coverage, I would say to investors, let this shake out a little bit right now. Everything with the volatility, I think the valuation is still a little high. I'm looking for relative value. Tiffany would be a great relative value story, about 17.5 times earnings. Even a Coach at 17.5 times earnings too. And what you're getting with those companies is a more established framework within China and even Europe. And you're also getting a more of a lifestyle collection. Tiffany, for example, sells handbags and sunglasses.
And they also sell some cheaper items as well, right? There's a big tourist trade for Tiffany's as far as silver goes. In other words, they can kind of sell the name and then still offer something more affordable.
Correct.
You're getting
that's correct. You're getting a broad platform
of Tiffany's. Prada doesn't have those choices.
Correct. I mean, Prada is upper end, and again, that's a good place to be in China right now. But the thing with Prada is they're still in growth mode. So, do you want to pay that type of very high multiple while there's execution risk over the next couple of years? Speaking
of execution risk, how many stores do they have right now in China?
They have 18 stores right now. They're looking to have, I believe, about 30 to 35 by 2014. So there's relative to Tiffany and Coach, they're still lagging. And I think there's more growth opportunity within Tiffany and Coach, at least over the next couple of years.
Again, with Prada, if you're talking about China, there's obviously department stores in China, department stores here. How does their growth in that area stack up again to some of their competitors?
Pretty well. Prada is trying to get into 55 more stores over the next 5 years within department stores, shop-in-shops. But I think Tiffany's and Coach are more established in these areas at this point. And you have to think about what is Prada coming to market there. Probably with just handbags, Tiffany's and Coach are more expansive in more areas of their goods.
More choices. Brian, thanks very much. Brian Sozzi joining us here, equity research analyst at Wall Street Strategies.